DaVita is a kidney dialysis provider, and Warren Buffett has a sizable position in the business for quite some time. He owns $4.9 billion in the company, even though he bought it at lower prices. But let's look into it. Is it still a buy? Well, we can see overall they had a nice growth trend, constant growth. After 2020, they were stagnating for a bit, and that is simply because, as you know, their customers are dialysis patients. And sadly, during COVID, people with weakened immune systems or just general health issues died. So that impacted the operations, and what is very interesting about this company as well, it has started to eat its own shares. From 216 million shares in 2015 down to 93 million. So this company is really devouring its own shares. In 2020 they bought back 20% of its shares, but this went hand in hand with a debt increase. They're currently reducing that debt, and it's working very well. We can see they paid 800 million in debt in 2023, and they can afford that because they make a lot of free cash flow. $1.4 million in 2023. In the first quarter of 2024, free cash flow was negative, but that was because of some payment issues. We can see accounts receivable, that really impacted them. They're gonna get that money eventually, but it will just show up as negative in the first quarter. And because of that negative free cash flow, their net debt went up last quarter. Overall, it is stable. They expect to make around 1 billion in free cash flow this year. So down from last year, but we can see free cash flow is a bit more volatile. But overall, it is growing. You know, you're not gonna have the explosive revenue growth that you had before. This was financed a lot via dilution, but now they're using that cash flow instead to buy back shares. They're still gonna have revenue growth, but not as explosive as before. And they're also diversified, which I like. They're in Brazil, China, Colombia, Germany, Malaysia, Poland, Portugal, Saudi Arabia. So they're not only in the US, and they're still expanding. There are some risks with the company, of course, if they're on kidney dialysis. For example, if kidney transplants from pigs or something become available, then DaVita is gonna suffer. Of course, it will be great for the patients, but DaVita would be hard hit there. Now, when we look at it, we have a fantastic business, long growing revenue, international presence, not too much debt. Now then, what is the risk? Valuation, of course. The stock has shot up very much from $70 per share in October, so it's not even that long ago, to 140%. So in a few months, you could have made a 100% gain here. And we can see this from the free cash flow yield. In 2023, you had a 15% free cash flow yield here. So even without putting the numbers in my sheet, I would say this would have been a fantastic buy. I'm sad I didn't look at the stock during that time, but let's find out, is the stock a buy at these current prices still? Now, what are our assumptions? First of all, yes, your free cash flow is going to be down this year, but I would say overall, the levels of 2020 are a very reliable free cash flow. They're going to be able to achieve that afterwards and grow from there. That would be around $12.90 in free cash flow per share. I would say we're going to buy around 7% of shares back. They're currently yielding a bit more than 7% free cash flow. So I would say 7% to buy back shares, the rest of that to pay down debt. So not that they take on more debt to buy back shares. Yes, they could do that, but their debt amount is already quite high. I would be worried if they would do that for much longer. Some revenue growth, around 3 to 2%. That is maybe a bit conservative. They grew faster before. Want to be conservative here, have a margin of safety. No payout ratio. They're going to use all the cash to buy back shares. 15 multiple, not too high, not too low. That would give us intrinsic value of $169 a share. Current value $140 per share, so yes, you would still get a 10% return here. Now what if it goes a bit better? They're gonna achieve higher revenue growth. Our revenue growth was very conservative. 18 multiple because it's a higher growing company, $230 a share. That would be a fantastic buy. Now what if it goes worse? Basically only share buybacks for the next 10 years. 12 multiple, $105 a share. Now what do I think about DaVita? I think it's a fantastic business. I'm very sad I missed it. I still think it would be an excellent buy, but I'm going to leave it on the sidelines for now. Maybe it's going to rally up more, but I have some other buys I want to do right now that are more attractive to me. But overall, DaVita, fairly low risk, stable business. And I think it's clear why Buffett owns it. Now, what do you think about it? Write down below. Have a good day.